do you think we're going to see a recession in Europe, and how is that going to impact the price of oil?
Well, we heard this morning from Christophe, Sergio, and Badri about the challenges that are facing the industry and the oil price outlook. I think what you have to look at is two things. There is definitely a very strong scenario where we could have another recession in the OECD countries or in Europe, and less so in the US. But this is going to be balanced against a very robust and strong demand in some of the emerging economies. And also against that, one has to look at the difficulties on the supply side. So the supply side, I have always said that the supply side in our industry continues to be challenged. There is going to have to be a requirement and a need for massive investment in this industry. So, you know, my own view is not dissimilar from the views of some of the panelists this morning, $80 to $95. If you look at the forward curve, it still looks, it's in backwardation, so it's forecasting a price which is not spiking up in the short term. But who am I to tell? I mean, there are people who are much more experts in this field.
Well, right now, the oil curve is tending upward, so is that good news for your company? Does that mean you will increase investment in exploration?
Well, we don't do exploration to start with. We service companies that have resources in the industry, but obviously our business is very much driven by the amount of money that they spend, and the higher the oil price, the more money they spend. But most of the projects that we're working on and the visibility that we have on the investments for our clients are really based on much more subdued and conservative oil prices, more in the $60, $70. We've heard this morning from Sergio Gabrielli of Petrobras that even the subsalt, very deep water fields, they break even at $45. So the industry is quite conservative, and I would think that the amount of capital that will be spent in the industry for the foreseeable future will not be impacted by short-term volatility in oil price.
Okay, so for Petrobras, the break-even price is $45, but for you in the oil service industries, do you have a break-even price where you need to see Brent trading?
No, we have, there is no, I mean, the break-even is linked to the projects where you're putting investment. When you are in the service industry, we have a much wider portfolio for all our clients. Most of our clients have a break-even price which is significantly below what we have today, so we're not seeing any reduction. I mean, it varies from client to client. Some of them, it may be around the $60, $70, others may be lower than that. Middle East producers, their break-even price is more in the 10s and 20s. So that's, you know, the price has to go down very, very much for their business to be impacted. No, I mean, our business, we don't see a reduction in demand from our clients, both from their capital spending plans as well as their operating expenditures. In fact, on the contrary, we're seeing the operating cost of most of their production going up.
All right.
Because of the increased difficulty with this business.
Is the oil services market tightening, and where are you seeing the most activity?
We are seeing a lot of activity in. We're seeing activity in the Middle East. We're seeing activity in Southeast Asia. We're seeing a lot of activity. We're seeing resurgence of activity in West Africa. We are busy in Central Asia. We're helping the Turkmen government develop some of their gas fields. In terms of tightening, we are seeing some tightening in some of the aspects. We're seeing, for instance, the drilling market now, the jackup market, the prices going up. In our business, we're a people business, and the biggest shortage that we foresee and we're worried about is the shortage of the human skills and the human capability, and that's something that we're addressing. This is an area of great concern to us, and we believe that you know, over the medium term, unless there's a lot more investment in people going into engineering schools and addressing the shortage of talent, that this is going to be the crunch in our business. The problems that have taken place in the Middle East, in the short term, they could have impact in terms of dislocation in the market. It has had really very little impact on our business. Our business in Tunisia is back to normal. In Egypt, we completed business. We're looking at new opportunities. And in Syria, we completed the 2 projects that we handled last year, and they've been done very satisfactorily. Longer term, I'm really very optimistic about this because these countries, there's going to be an increased demand for economic opportunity. The oil and gas sector is the mainstay for a lot of their economies. There have to be added investment in this sector, and it has to be better managed. So in my view, the impetus for demand in that region is going to continue unabated.
All right. What can you tell us about your new venture with the UAE and China National Petroleum? What projects are you planning?
We have two ventures. We have a joint venture with Mubadala, which is Petrofac Emirates, which is a joint venture that exists right now in Abu Dhabi. We have about 400 or 500 employees in that office. It is basically to address the needs of the Abu Dhabi market and also to support the Mubadala investments around the world. We have another joint venture that we have recently set up with CPECC, which is the engineering arm of CNPC. And it's also to be based in the UAE, and it's around creating a joint capability from Chinese capability as well, capability from Petrofac, to support the investment plans of CNPC internationally, as well as some of the Chinese national oil companies outside China.
And just to pick up on where you were on Libya, when do you see Libya returning to full capacity?
Again, I have to rely on what I heard from people like Mr. Badri today. I think everybody is talking about sometime end of 2012, in another 15, 18 months. I see no reason why that should not be achieved.
All right. Now, given you already answered this a little bit in the beginning, but just more to get at your outlook, do you see demand for oil services softening at all in the next year?
No, I think the demand for services is going, if anything, is going to increase. We don't see softening. We see patches where we have increased competition. We're seeing more competition on some of the onshore business in the Middle East. But overall, the demand of our business, at least, continues to be robust.
And you set that target, I believe, of doubling the profit from the integrated services business by 2015. Are you still on track to do that?
We are on track. It's really doubling the profit of the overall group by 2015, and that's partly driven by the growth in the integrated energy services business. That's correct.
All right, and last question. What do you plan to do with your licenses in Mexico? What do you plan to do with your licenses in Mexico?
Well, we actually don't have the licenses. We have service contracts. Where the licenses remain with Pemex under the constitution in Mexico. You're not allowed to have the licenses. We will continue to service the Pemex. We're hoping to, I'm going there on the 17th. We're signing the contracts officially. We're looking forward to having a long and productive relationship with Pemex. So we will continue to service them. These are 25-year contracts, and we hope to be there for a long term and do a good job for Pemex.
All right, great. Do you have any more questions?
Just one more.
Sure.
You talk about demand picking up. Do you feel a big push from explorers and the majors towards exploration now? That we've had an outlook for oil prices to at least stay elevated. Is this the pressure now to go out and find new oil?
Well, I think the pressure for the international oil companies as well as national oil companies to find oil is going to continue. This is a huge challenge for the industry. So certainly the prices continuing to be robust despite the slowdown that we're seeing in Europe and the US is giving confidence to the resource holders, national oil companies as well as international oil companies, to continue to spend in that space. So yeah, I see the exploration budgets going up.